Well, g'day there, everybody. Thanks a lot for joining me as we transition into Thursday's session worth of trade. This is going to be a continuation off from the analysis which I left you yesterday, very close to, of course, the close on Wednesday. The reason for this is because we saw the transition, or at least the continuation, off from the candlestick which was developing during yesterday's session. I do believe we are at, relatively speaking, a rather pivotal moment in the US financial markets, and this is going to be, I do believe, that of a very important market update. So I encourage you to sort of put yourself in a state of concentration, maybe over the next 10 or so minutes, as I just break down what I believe is going to sort of play out over the next coming sessions, really as we close out this week, but really as we round out the month of May and move into the month of June. So during yesterday's session, let's start with the Dow Jones Industrial Average. It was shaping up as though we were going to develop that of a dark cloud cover. You can see the original gap up, and with about an hour's left in the session, we were pushing into the previous day's relatively long day white Moroboshi candlestick, okay? And this was looking up and shaping up like that of that dark cloud cover. However, as we continued to and into the close, we saw that of an engulfing candlestick set up. Now, on face value, this is a relatively bearish candlestick pattern. Now, if you were just looking at it in terms of candlesticks, your original sort of analysis would be that, hey, we should be seeing that of a large sort of rotation potentially all the way back down to support. However, and I did touch on this yesterday, was that we do have this open window, which essentially set up from Friday last week into the beginning of trade, which was first thing Monday. Now, on this inspection, and when you really see these types of movements, especially in the market indices, they will generally close, okay? And that's more or less what I assume is going to happen as we move into Thursday's session. Now, to put this in context, this is where I think a lot of people are going to get mixed up, and this is really the importance of what I really want to get across to people who listen to these market analysis, or at least these market addresses, because I think a lot of people are going to position themselves incorrectly, and I don't want you to be one of those people. We have timed this market really quite perfectly, even leading into the sell-off back in the month or in the late stages of January into the bottoming pattern into February. The Fibonacci retracement up to that 61.8% retracement area, the subsequent sell-off to hit that secondary bottom, the timing of entries off from the support, then of course the third retest down here. Most recently, we were calling the hammers down at support, and then what has been the drive off from just below this 24,000 handle. Now, a lot of people, and again, I've touched on this, are talking about that of a bullish type of channel. And yes, you can be technically correct. I don't really like the formation. This is roughly it. You can see on my screen. But the most important thing about a bullish channel, above all else, is that it is bullish. And there is a lot of analysis saying that, look, we've touched the top of what is that resistance area. I know my template at the moment, I've just drawn this on very quickly, isn't matching up all that well. But if I make a lesser sort of degree or slope of the angle, your imagination can really do the rest. And you can say to yourself, well, naturally, we should be seeing something like this. However, mixing, of course, the two-day reversal candlestick pattern, which has set up on Monday and Tuesday, with this gap over here, and with, of course, all of this past analysis leading us into this macro support area, and what has been that sort of relief rally, which really began the month of May, again, flying in the face of sell in May and go away. If we are to see that of a pullback, first of all, you should be paying very close attention on the Dow Jones Industrial Average, roughly to 24,650. Yes, I am adding on a couple of points. The top of the open gap, so to speak, or at least the high of Friday's candlestick last week, was 24,774. But again, the markets are not perfect. It is more of an art. So once we fill this gap at that sort of area or that location I just quoted, you have to pay attention for potential reversal candlesticks. Now, this may not entirely play out. It may not entirely develop, so to speak, during Thursday's session worth of trade. But if we begin to crack this area, which is, of course, this little sort of temporary support area, what I'm assuming is going to happen, and this is what I'm going to be looking for moving forward, is a very sudden reversal from anywhere, really from 24.3 up. Okay, so really roughly this point, which is really the midpoint of what people are deeming to be that of that bullish channel. And then that is going to be the larger continuation to the upside. So yes, We are recognizing, of course, that the sentiment, so to speak, is a little bit hazy up and around this resistance area. However, the overwhelming chart pattern still, and if you go through a lot of the companies in our top 12 individual trade list, they are still overwhelmingly bullish, which is sort of flying in the face, of course, of this reversal candlestick pattern. So just to make, or really just to sort of condense this down into a couple of sentences, first of all, pay attention to the open window. This is almost certainly going to close during Thursday's session, but, and this is a big disclaimer, personally, although I can make a bearish argument, which would essentially take us on back down to the support of this bullish channel, the pattern itself is still bullish. And instead of going short, and I think a lot of people are beginning to contemplate this, you don't want to be taking shorts potentially from the crack of this red horizontal line that I've just drawn on my chart. You'd rather be waiting for the reversal to take place, and this can set up over a number of sessions, or it may actually play out on Thursday. But really, we're looking for the larger continuation to take us on up all the way back up and close these open windows. Now, what is making me think that this is going to play out is, again, because of the past 3 months worth of trading activity. We've been waiting for this sort of setup. We spoke about it over the weekend and nothing has changed. Also, on top of that, we have broken above the resistance swing high over here at 24,750. We've got the NASDAQ back up at its respective sort of open window that it has partially closed, and we are seeing, of course, the Russell 2000 break out to new all-time highs. That is telling us that the market breadth out there is still relatively strong. Yes, this is the Russell 2000 on my screen. We have been just galloping above this 1,600 handle. Yes, yesterday we also have that of a tweezer top type of reversal candle. But before this candlestick even played out, we were speaking about the back test of the pivot. So this is playing out exactly as we have forecasted, and it's synchronizing quite well with potentially a whipsaw, which is going to prevail for a lot of people who are looking at this one candlestick, not taking into context what has happened in the past, of course, this open window, and thinking about the larger move that I still very firmly believe that we are in. Pardon me, we are still in. Of course, SPY calls, even Q calls up and around that resistance area. Just be mindful, of course, that the market can move into that of a pullback, given, of course, this signal here before it reverses again and continues to the upside. All right, that is the major warning that I want to put out as we move into Thursday's session. This is also that of an update for Wednesday. But I think you get the drift, so to speak, with the analysis itself. The last thing I want you to do is to jump into a bunch of bearish positions, all right, up and around this little short-term resistance area, thinking that the market is going to come all the way back down to 23,750. Yes, that is possible. However, when we start looking in, I guess, the context of our top 12 individual traders and, of course, market leaders, not to mention, of course, the Russell 2000, you can see for yourself that even when we put into perspective the discussion that we had on the Russell 2000, Apple is still up at its respective all-time high. And again, we've been speaking about the potential for a back test back down here at 184, so to speak. We're still holding up at 187, but if you are to see selling pressure materialize, again, these market leaders are still going to be holding up, relatively speaking, above most, if not all, of their rising exponential moving averages, and have been, of course, putting in that of stair-step continuation patterns. If I change to Netflix, you can see a very similar pattern. Now, we're not at that all-time high. We got very close to it during yesterday's session. We do have that of a little bearish candlestick again, but at the same time, we're still holding, we're sort of coiling as we allow these Bollinger Bands to sort of squeeze price action and again, hold and bounce ultimately off from those rising exponential moving averages. So please do not get stuck short or put yourself in a position really to be sort of influenced by that of a potential whipsaw to the downside. It's not the correct analysis at this point, and it's a major sort of disclaimer as we move into the end of this week. I can go through the rest of our stocks. You can see for yourself, Amazon, if I bring up those exponential moving averages, we are still holding above those exponential moving averages. We are very close to the all-time high. There's nothing bearish about this picture other than we still, marginally speaking, have that of a very small open window, which has set up after earnings as well. But all things considered, this is still technically trending, much like the majority of our individual stocks on the left-hand side of my screen. As I continue to oscillate through some of these, we've got Boeing Airlines, which has been rather volatile, a massive session on Monday, but you can see for yourself another sort of tweezer top candle. What is it doing? It's filling the gap which set up between that of Friday and Monday. So again, the technical picture for a lot of these companies are still very much so bullish. Baidu had a reaction around this 273 handle. We have closed this first gap down here at 240. A lot of people brought to my attention that we do have a very small gap over here, which is taking us back down to potentially 232. But that sort of situation, or at least the the forecast that we were speaking about, what to look for with Baidu activity moving forward is still very much so solid, either at this pivot at 240 or down here at 230 as well. And I just wanted to give you an update on that. Caterpillar still acting a little bit flunky. Again, what happened? We closed the gap, which established itself on the gap up on Monday. So this is all well and good. Yes, we still have this long day Morobozu. We have the upper wick, which is fantastically sort of positioned as at Monday. So if we get a definitive move above the high of Monday's candlestick, that is a go-to trade on Caterpillar. However, we might see a little bit of continued volatility with that. We've got COP, which is still trending, so to speak, above 67.89. In context, though, we can still come on down, close the gap, back test, or at least retest this old resistance as new support before we see the next wave of buying pressure. And again, this is going to potentially coincide with a major whipsaw for the bears out there, which is going to end into that of a sort of a bear trap, or sorry, a bull trap, so to speak, when we see the market continue to the upside. CVX still holding resistance. Up here just shy of 130.79, not a big mention there. We saw Google again gap up yesterday, or at least on Monday. We closed the gap again, same story, but it does look a little bit weak. We have an upper gap just shy of this candlestick here. Again, we were talking about just simply leaving this for the time being. Of course, if you entered down here at 1,000, 1,025, 1,050, 1,055, it's still looking okay. But this is probably going to be the ebbs and flows of the market until ultimately we drive on up to 1,131. We've got IBM, which is doing everything in its power to sort of grind higher, which is actually good for a lot of people. Still looking at these open windows, still closing, but this is going to be sort of tied into potentially market volatility that we see on Thursday and Friday. I've already recapped Netflix, and to close with, we've got Tesla, which is exceptionally weak. We're starting to see that of support potentially break down. Personally, I don't like to trade against the trend of the overall market. The overall market itself is still up. However, you can make a very easy argument that Tesla is potentially going to break 272 and come all the way back down to 262 and 244. However, what I think would be a better trade is taking market positions, or this is what I'll be doing moving forward if we see the pullback and the reversal, is taking additional positions in the SPYs and also NASDAQ if we see any much of a pullback, and then ultimately the continuation back on up to these higher levels as well. So that's going to do us as we enter into Thursday. I'll bring you a recap, of course, as at the close, if there is something to talk about further than, I guess, to this initial discussion as to what I believe is going to play out. But again, this might be a very pivotal sort of moment, and I'm very glad that I've brought it to your attention prior to it potentially setting up on Thursday, and also potentially continuing on Friday as well. So check back in routinely, and I will give you another market update when the time is right. All right, so everyone, on behalf of myself, I'm going to say farewell. Have an enjoyable day on Thursday, and I will be back, of course, in due course. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.